Welcome back, guys. Thank you for watching my video and giving me this much appreciation. So this is Sunday. I think I should go for the weekly analysis today. So here I am. In this video, you will know how to do the top-down analysis actually from weekly chart to, and I'll go until 15-minute chart and step by step so that you can do the same thing in every week, Saturday or Sunday. And this will be your, determining the daily bias, how this week price will act. So this is very important, guys, because if you know how to do this, then daily bias will be very easier for you. So let's go to the chart. Here is the dollar index chart, and every time you have to start the analysis from the dollar chart, because when dollar would like to go higher, all the other markets will go opposite of the dollar. So here is dollar. If you see, this is the weekly chart. This level is the monthly fair value gap low. This is monthly fair value gap high. This is the consequent encroachment, and this box is actually I fair value gap. I marked it from the weekly chart. Here is the monthly fair value gap, which has already traded, and it has cleared all the liquidity from here. Give me the market structure shift over here, though there is no fair value gap on daily chart, so I'm expecting that it will go higher. And this is a very big week because Wednesday is the FOMC day, so I think this week market will go to this fair value gap, at least to this fair value gap, or if it has more energy, it can go to the consequent encroachment of the monthly fair value gap. This makes expectation actually for dollar index that it will go higher. So let's go to the daily chart, and here is your daily chart. As you see, what it did in daily chart previously, I marked it as a breaker, low, high, lower, low. This has higher candle is my breaker. Market came to the breaker, clean this liquidity from this week, and then gave me the market structure shift, traded the daily fair value gap, consequent encroachment. If I make it a little bit wider, okay. So you see, it has traded the consequent encroachment of the daily fair value gap, and there is another daily fair value gap. I'm expecting this as a breakaway gap from the daily chart. And then last week I told you that it could go to the this volume imbalance. You see this volume imbalance, but it has actually traded this volume imbalance from here, and now it's acting like this volume imbalance actually acting as a support. So my target is it will go to this volume imbalance, clear all of this buy side liquidity, and if it has more energy than this week using the FOMC, it will go to this weekly I fair value gap. You remember I have shown you this is the weekly I fair value gap. So let's see what actually do. And if actually it doesn't want to go higher, then what else it can do is it will this low, if it's broken, if this fair value gap broken lower with energy, that means some candle closed below this fair value gap low, then I will expect that market will go here or it will clear this low sell side actually. But I'm strongly, my opinion is it will go higher, it won't come lower. Yeah, it can come to the this order block level, it can come over here to make it as a support, and it's possible that it will come over here. Also, there is a very little fair value gap from the daily chart. It can come over here, tap there, by creating a big wick, then it will go higher. So this is from daily chart. Let's go to the hourly chart. In hourly chart, you have seen that it has actually cleared this liquidity, and there is a very, you see, a very good fair value gap. If market would like to come here before FOMC, like maybe Sunday, Monday, Tuesday, and before that, if it goes higher over here somewhere and then started to come lower, this fair value gap low will be my target. My thinking is, let me clear it, guys. Actually, if it do something like this and then this somewhere here to come this fair value gap, I will look for buy from here. It will be more confident for me to take the buy from this fair value gap. And if it really would like to go lower, then it will clean all of this liquidity. But i'm not uh, I'm not, I do not want to see this actually. I don't want to see price come to this low. If it comes lower, then this fair value gap would be its last test to trade. You see this fair value gap, it can come over here, then it will go higher. Or if it like really want to go higher and didn't come lower, until this low is not broken, I'm expecting the higher prices. So I think, okay, in 15-minute chart you can see that there is a 15-minute fair value gap. It's very it's situated in the upper level of the volume balance. So what can it do is it actually traded to this specific gap and then started to go higher. In that case, it won't go lower. If you go to the lower time frame, and you see this, it has actually broken this fair value gap and using it as a resistance, then you can expect that market is actually coming to this hourly fair value gap. And also there are some fair value gap over here, 15 minutes, something like that, but that is low probability for me. I am expecting the higher prices, but price can do anything. So let's go to the okay. Before going over there, overall I'm expecting the higher prices for dollar index, and so the other index I will expect the lower prices. Let's go to the ESZ 2023 even S&P. So here is even S&P weekly chart. You can see actually it has traded the weekly fair value gap, and if you see closely, there is a little fair value gap it has traded 2 weeks before, and then started to go lower. Last week I was expecting that it will clear this low, but it didn't. It was actually consolidated over here to this range, and this week using FOMC I'm expecting that it will come lower. And you see this line, this is the monthly fair value gap, this is the monthly fair value gap high, monthly fair value gap low, this is the consequent encroachment, and this consequent encroachment is actually from the monthly chart. Let me show you that actually. Okay, you see this week, this is the consequent encroachment of this week. So it has just came to that week and gave me a respect to go went higher. You see it went higher from there, little bit higher. So I think it has done its job, but I will watch that level as well. It's a very important level for me. I would like to see that it will just break this low, and it will the price will use this consequent encroachment as a resistance. So let's go to the daily chart first. Okay, so here is the daily chart. This and this is the I fair value gap, daily I fair value gap. This candle low and this candle high. This is the I fair value gap. This is the consequent encroachment of the I fair value gap, and there is the fair value gap, daily fair value gap from this candle, this gap. You see this gap. So there is two fair value gap. One is I fair value gap, another one is daily fair value gap. Price actually went higher, clear all of this liquidity, came down. So and there is a very little, you see, very little volume imbalance. You see this candle high close and this candle close, there is a gap. That is my volume balance. You can say I volume inversion volume balance. This is the sell side liquidity, also the consequent encroachment of the monthly week, discount week, and this is the lower consequent encroachment. Uh, I mean the monthly fair value gap consequent encroachment, also the low. I'm expecting that price will uh, come lower. It will trade the monthly fair value gap this week, but before that it can go higher and use this I fair value gap as a resistance, or the lower part of the daily fair value gap, also the daily I fair value gap consequent encroachment. Guys, you have to mark all of this level in your chart, and this is how I actually understand which level is it. I just mark it, write it down by my the way I can easily understand. So you have to do it by yourself, and you can write down whatever it will help you to understand when you will be in the lower time frame. So that's very important. If you just watch my video and think that you are learning, then you are in a bad, it won't help you actually. So if you really would like to learn about how market or price book the market, then you have to do this homework by your own. You have to mark all of the level in your chart before the effect or after the effect, or whatever you it is helpful for you, but you have to do this homework, then you will start to learn. So that is from the daily chart. Let's go to the hourly chart first. Okay, so in hourly chart there is a very good hourly fair value gap. Also this is the volume balance. I'm thinking that price would go higher. It will clear this buy side liquidity, trade this volume balance. Also there is another hourly fair value gap. If you closely look this hourly fair value gap, I want this keep open. I do not want it to be traded. So because there's so many reason, it is actually situated upper level of the consequent encroachment of the daily fair value gap, and also if market really would like to go lower, then it should keep this this portion open. So I'm thinking that if market really would like to go higher, then it can go to this gap, and the consequent encroachment of the daily fair value gap. Also there is also volume balance. All of this signature actually made me to think it can go over here, then it will come down and clear the sell side liquidity. One more thing, guys, if you see this low, this low, this low, they are relatively equal low, so this is very strong sell side liquidity. So if market came in Sunday open, it came down and cleared the sell side liquidity, then it started to go higher. I will wait for more information that it really would like to come lower. But if it didn't trade over here, or just give me a shallow run, just a week, nobody close behind this, below this line, and it started to go higher, then when it will come to this low and also this low, I will, if it come over here to this gap, I will take my highest risk to take a short, and my target will be this sell side liquidity, also this sell side liquidity, this is also the monthly week discount consequent encroachment. Then it can come lower. I will talk about all of this later when market will actually trade all over this place. I will talk about that. Before FOMC, I will try to upload another video, but right now I'm thinking that it will keep this portion open, or it can give a shallow run, then it will start to go higher, it will take some liquidity, it will trade any of this fair value gap, then give me a lower market structure shift. I will take short from there for this clean buy side sell side liquidity. That is my plan actually. So all depends on Sunday open. We'll see how did it trade. This is actually trading the daily fair value gap low right now. And so that's all for the hourly chart. And in 15-minute chart, nothing is very important over here. It's simple. There is your gap. This is also the 15-minute fair value gap. It has actually cleared this sell side liquidity, and now it was traded the 15-minute fair value gap, and I'm expecting that it will go higher somewhere here first. It will keep this place open, and then it will trade over here. That will make this low more obvious to trade. So that will be the high probability of trading. That's all for the mini S&P, and let's go to the NASDAQ. So first NQZ2023. So here is your NASDAQ. I'm actually trading NASDAQ for last 2 weeks, so I thought it will be very grateful for you guys as well. If you are indices trader, then it will be helpful for you as well. You see, market actually traded the weekly fair value gap, and then it started to come lower. This is also the monthly week discount, as I have shown you from the E-mini chart. This is also the consequent encroachment. This is the low, and there is a weekly volume balance, weekly fair value gap. This is the monthly fair value gap, consequent encroachment. I'm expecting that price will come to this monthly fair value gap this week. So let's see what it did actually, and let's go to the daily chart. Here is your daily chart. If you see it, this was my daily inversion, daily fair value gap. This close high, this candle's high and this candle's low. This is the gap it has actually traded. I took so many trade depending on this gap, so it has traded this area. I think it's done its job over here. It has cleared this buy side liquidity, gave me the, you can say this is the the market structure shift or something like that. It was very near to this low, but it didn't clean this low last week. I'll show you this level when I'll be in the lower time frame. What is that level? And there is the volume balance. Okay, here is the volume balance. So I'm thinking that it will trade to this area this week, and if it has more energy, then it can go lower to toward this sell side liquidity. Let's go to the hourly chart. Here is your hourly chart, guys, and I told you that what is this level. This is actually the volume balance from the hourly chart. You see this volume balance, it has respected before, and last week also it has respected here. And if you see closely, it has actually cleared this buy side liquidity, gave me the market structure shift. Also, if you mark this one as a market structure shift, it is also market structure shift, and now it's trading over here. I really want to keep this open, and before trading here, it should go somewhere here upper level, and it can go to this gap as well. Yeah, but this daily fair value gap, again, this is my highest level. If it breaks, then I will go for high the buy and it will go higher, but I really want it keep the price below this fair value gap, daily fair value gap. My thinking is it can go to this gap somewhere, or it will trade this high and then it will break down. Let's go to the 15-minute chart. Here is the 15-minute chart, and you can see this is the buy side uh, for your understanding. This buy side, I really expect that market will keep this open, or if it come down it will just give me a shallow run, not a very clean run to clear this buy side liquidity, as I am expecting the lower prices. And depending on PO3, I want first 1 or 2 days, that means Monday, Tuesday, it will trade higher somewhere here, the hourly fair value gap or this gap little, it will trade over there. Then using the FOMC it will break down and it will come somewhere here. We'll talk about that later. Maybe this sell side will be more obvious place if it doesn't trade right now and went higher, or if it just gave me, the clear sell side liquidity run. Then I mean, in Monday, if I see, in Sunday, if I see that it has actually traded over here and give me a market structure shift higher, then I will expect that it will go to this high and also the hourly fair value gap, also this gap. I will expect that price will go over there. This is my direction. So I will, if I take an entry to the lower time frame, maybe I will take entry over here. I will close my entry over there. That's all. I do not want to take a trade from here and it will close over there. I don't want that. I just would like to take some meat from the bone. So middle was somewhere. I will take entry over there to the lower time frame, like a 1 minute or 5 minute, and I will just get out from the chart or from the, the price. So if it goes higher and it comes to this hourly I fair value gap or this gap, I will look for the short, and that will be very strong for me, as because I'm expecting that market will go lower somewhere here, and that is very important for me and for you guys as well. And it's already a big video, but guys, I don't know how to make it more shorter because I have described everything. So guys, sorry for the long video, but if you watch it clearly and if you don't really understand my speaking, then just watch it twice. I think it will be helpful for you to understand how to do the top down analysis and how to implement the analysis to the market. I am expecting the lower prices, but before going low, it should trade somewhere here, the higher price, then it will start to come lower. That's the thing. If you are new, please subscribe to my channel, give me a thumbs up if you like my video, and cheers. Be safe, guys. Bye bye.